Hello and welcome into the KE Report. I'm your host, Shad Markwitz, and today we're getting an update from Sean Brodrick, editor of Wealth Megatrends and contributing analyst to Weiss Ratings Daily. And Sean, always great getting you on the KE Report just to see what has your interest in both the commodity space and the larger markets. And so we're going to dive into a couple different areas. I still want to kick things off with the yellow metal, gold. It's still breaking out to higher levels. Today we've seen some nice price action. It's not quite at all-time highs, but it's pretty darn close today. It's giving a boost to some of the precious metal stocks. It's giving a boost to silver. But when you look at it, Sean, even though gold is doing well, when you look at GDX, it's still at lower levels than it was years ago with lower gold prices and lower margins. So maybe talk to me about how you're looking at gold, but then how you're looking at gold stocks.
Yeah, well, that's great questions and ones I've been wrestling with my subscribers for, quite some time. Gold, I'm really bullish on gold. Nothing travels in a straight line. We did see all-time highs last week, then followed by that real pullback on Friday of like 1.5%. Gold miners went down more than 3%, but we'll just deal with that later. So we saw gold pull back, and so we could be looking at sideways to down action for a while, and then there are plenty of fundamental reasons for gold to go higher, and those will push it higher again, but nothing travels in a straight line. That's all. And I told my subscribers a few weeks ago that we wouldn't be buying more gold miner positions because of like how toppy things looked. And sure enough, that's kind of what's happening. We have plenty. I'd like to own more, but we'll wait. We'll see how things go. And there are so many reasons why for gold to go higher, but there's a general insecurity in the world which is added to it, not only about geopolitics, not only about the economy, but also about currencies. And we are seeing people in China buy gold in order to hedge against their currency. They believe that one of the things that the Chinese government will do to counteract upcoming U.S. tariffs will be to lower the value of the currency. That's one way you can mitigate a tariff, is just to make your currency cheaper. And so we're seeing people in China buy a lot of gold. In fact, there are reports of major banks in China not having gold to sell to investors and consumers who want to buy it. That doesn't mean you can't buy gold jewelry in China. Of course you can, but the investment side, I mean, what was there seems to have been snapped up. Let's move on, though, to the miners. Now, again, this is a thing I've been wrestling with my subscribers. There are gold miners we buy, but they have to meet certain rules because we see many miners. I'm not saying that they're trying to make their stocks worth less, but the stuff they're doing really makes people shy away from actually buying those stocks. That includes issuing more and more shares over and over again. And maybe they're doing this to buy more resources, but sometimes it's just to keep the lifestyle going and stuff like that. And that is not a good thing to do. Those stocks that can't control their costs, and I know how hard it is. I know how hard it is with inflation to actually keep costs down. But some companies are able to do it, and those are the kind I like. Those that are growing their resources organically without having to buy a new company every year. That also works too, though smart acquisitions, which are actually accretive in like the first year you buy them, well, I like those too. There are stocks out there that fit that bill. Most gold miners don't. That's why you've seen the major indices, GDX, GDXJ, underperform. Those can still be a way to play gold because once gold really takes off, and we're nowhere near my high, I had been forecasting $3,000 gold by the middle of this year. We've gotten awfully close. That's still my target for the middle of the year. But beyond that, longer term, I'm looking for a gold price over $6,000. As gold ramps up beyond $3,000, you're going to see gold miners run, you know, because the profit margins for most of these companies are just going to look fantastic. So, all depending on your time frame, but I wouldn't be a buyer of more gold miners now because I want to see if we actually get a pullback after the action we saw on Friday. Maybe we will, maybe we won't. But we'll know when the time comes to buy. And one of the indicators will be gold miners start to pop higher, really start to run. And you see that happen, and like people say, no, I've missed the move. No, that's the indicator of the run to come when they first start to move. You just have to move quick when that happens. So that's the kind of thing I'm looking for. I'm not trying to predict when, but all my cycle work points to much higher prices in gold. And we keep getting more and more fundamentals around the world indicating that that's exactly what's going to happen.
Yeah, some great thoughts there, Sean. I mean, you want to wait for a potential short-term pullback because we have gotten a little overcooked, overbought, but that could be a good buying opportunity. But a great signal is often when the mining stocks start responding and kind of front-running the move. It's not that you're missing the move, like you say, it's that the move is actually starting to go into momentum, and then you can get into that action quickly and then ride into that momentum where more investors jump into the bandwagon. So a great signal to be watching out for people listening in as we develop over this bull market cycle. And if we go up to $6,000 gold over the course of time, there's a lot of room in there to catch a lot of the meat of that move for people that maybe haven't got invested yet. Let's also talk about silver. Silver, not just above 30, but above 33 today. It's playing along with gold. I would imagine that a lot of the silver producers or companies that at least produce some silver are getting a nice co-credit now or a nice primary credit. There's some development projects that have been sitting on the vine forever. Doesn't seem like anybody's ever going to buy them. Is now the time where we start seeing M&A in the silver stocks?
I would think so. And no one's more disappointed in the action of silver miners than me. For example, we've been having a nice run in Hecla since the beginning of the year, which is when we added it to one of our portfolios. And then Friday, on that bad news, it just gave most of it back. You know, that's a silver miner with some real promise here. It should be doing a lot better. I mean, we can speak about why it did, but really it's overdone. Whatever the reasons were, they were overdone. That should not be like that. Now, is that a buying opportunity? That's the question on like everybody's mind. Well, the thing is, it all depends on, I just spoke about with gold. Are we going to see lower prices for a while before we see higher prices? Again, I would wait for Hecla to start taking off, then I'd buy it. That is the thing to do just because you don't know when the bottom is until it happens. But I think many of these silver miners, and there aren't a lot of them. That's the other thing that just blows my mind, how cheap these are when there aren't that many of them. But there aren't a lot of silver miners per se. I mean, most silver comes as a byproduct of like other metals. And so they look cheap to me. They do. They can get cheaper. That is the thing. But when these things start to run, I am going to be a buyer again.
Do you think that the silver stocks, as they traditionally do, outperform gold stocks? Do you think that'll happen again? Or is gold in such a runaway train right now that maybe the gold stocks match the kind of runs that we see in silver stocks? How are you looking at that dynamic?
That is a fantastic question. As you say, history shows us that when these runs happen, silver outperforms and silver miners outperform everything. But is that going to happen? Because things have changed. We have this kind of twist, where now we're talking about big tariff wars, and that has everybody rattled, and we didn't have that last time around. So I would think silver will do well, and I think it could do incredibly well, especially as gold gets more pricey. People will start to turn to silver because that's what they can afford. I mean, I'm speaking about individual investors, stuff like this. But one thing you won't see is you won't see central banks buying silver. They don't. And that's one of the major forces driving gold right now is central banks buying gold. And along with big funds and like stuff like that, who at least at this time haven't invested in silver. So maybe things are different. Maybe silver won't outperform, but I'm not going to count it out yet because history has taught me that when precious metals run, silver outpaces everybody. But, we'll have to see that happen. When we see silver stocks start to move again, that's when I'll actually be adding to my positions.
Yeah, and a lot of people have noted that the gold silver ratio has been up in the high 80s, even as high as 90, even the low 90s. And so that's a pretty high disconnect between how silver has grown versus gold. Maybe that ratio comes down and silver starts to outperform. Maybe it makes that proverbial run to 50 again, Sean. We'll just have to see how it goes. But you were talking about tariffs, and you're looking at ways to make the volatility around tariffs, your friend in the commodity space, you mentioned looking at steel. There's some other commodities of focus that you're looking at. What other commodities have your interest in this current backdrop?
Well, steel is one. We added Nucor to one of the portfolios recently, and that's doing great. You know, it's America's largest steel producer. It has modern, up-to-date mills. It is leveraged to the tariffs because that's one of the big things we import is steel from other countries. However, American steel production, percentage wise, as a percent of capacity, is actually quite low. It's down around 70%. It used to be higher, around 80%, stuff like that. So there's room to make up for it. That's why I bought a US steel company. One thing I wouldn't be buying is an aluminum company. And the reason is because we're using all our aluminum capacity anyway. We really can't make any more. We have to import more aluminum. That's where prices are really going to bite, by the way. We use aluminum in like so many things and we have to import it. So I don't think aluminum companies will do much better with the tariffs. They could do somewhat better, but they won't be able to increase their capacity the way that certain steel makers will. That's one thing I would be looking at. You know, it's really kind of tough to judge, but I am trying to look for companies that provide things here in the US and don't have to import a lot of stuff. These can be services companies, stuff like that. Then you can actually do well. But while I have made some picks, I still have a lot more to come. So I'd rather not talk about them before I make them, if that's okay.
Yeah, fair enough. Let me ask you this. For a while, there was a lot of buzz around critical minerals, whether it's nickel, lithium, looking at manganese, looking at cobalt, all these different things. Are there any of the critical minerals that have your interest right now?
Well, we added Albemarle, and there's a good reason for that because their earnings were a disappointment, but the outlook was good. That was on February 12th, and the stock has been behaving positively since then. And if you look at a longer term chart, you can see a nice double bottom. And what they say, well, not just that company, but what people in the industry say is that we have hit the bottom of the price cycle in lithium. We are going to see higher prices going forward over the next 2 years. So that's when a company like Albemarle, which is the world's largest lithium producer, can actually really make some hay. And they spent the last year really turning the company around, trimming costs, cutting capex, stuff like that. And so they think that their cash flow is really going to improve this year with the higher prices. On the earnings call, they actually talked about three different price ranges, what they were doing either one. And I found that pretty good. So I went with the numbers from their mid price forecast, and it just looks really good. In fact, if you look at things like price to book for this year and next year, they're trading awfully close to book value, and they are ramping up production. They're like one of the few that actually can. Now, about 10% of like new lithium projects that were supposed to come online this year have been delayed, you know, because prices were so low last year. And so that gives an opportunity again to a company like that. I wouldn't buy the juniors. You and I had a brief chat about the junior lithium miners, and I know people like to buy those for potential moonshots, but things can really go wrong for them in a big way because they only have a very limited amount of like projects, breathing room, and stuff like that. But a large one like this, you know, I think you can do pretty well, or at least that's the way we're playing it, and it's working out so far. We'll just have to see where things go from here.
Yeah, it makes sense. I think some of the juniors really get hit hard when the prices crash like they do, but a larger producer like Albemarle can really capitalize on the disarray in the sector when things bottom. And if you're going bottom fishing and you go with the market leader, the sector leader, that's usually a good setup for potential gains. And so maybe it is time to start looking at the lithium sector again with some of the most quality stocks in that sector as a potential area for investors to do some due diligence on. Let's broaden the scope, Sean, just to anything outside of the commodity sector, anything in the tech sector, anything in the U.S. equities that have your attention right now as another opportunity.
Well, super cycle investor, we just added another cybersecurity stock. I held a bunch of them before. We exited them with some nice gains. Now we're moving back into them, and there's a bunch of reasons for this, but basically it comes down to AI because AI is shifting hacking and cybersecurity into high gear. And we have these companies that are throwing hundreds of billions of dollars at like AI projects. But the thing we have to keep in mind is AI can be weaponized. Hackers are using it for next generation phishing schemes, man in the middle attacks, even election tampering. And so there was a story in Forbes, which I would recommend people look up. And I'll just read you a quote from it because I put this in the issue. With large language models, hackers can create phishing emails that are so sophisticated they look like they were penned by your CEO. One notable case involved a large language model generated email that impersonated a company's C suite, successfully convincing an employer to transfer millions of dollars to a fraudulent account. There's a lot more in that article, but it's just downright scary. And this fear is going to drive people into using more and more and better cybersecurity that uses AI to catch things before humans can. Now, the cybersecurity market was already growing at a compound annual growth rate of 12.6% anyway. I just think what's going on with AI can kick that into overdrive. Anybody would be happy with 12.6%. Imagine if it can grow even faster. So I think that you have to find the select stocks. Now, those companies that have disappointed in the last earnings quarter, don't buy them. Let me say that because they're probably going to continue to disappoint. You have to be an industry leader in this. But if you aren't an industry leader, you can get a lot of business because people do not want this to mess up. I mean, this can ruin your financial year if you have a serious cyber attack that succeeds. And so that's why this has become so important. And I think that there's a lot more potential in that space as well.
All right, that's a good mega trend to follow up on. And you write about mega trends in both Super Cycle Investor and Wealth Megatrends. So appreciate you spending some time on cybersecurity. And I guess the big takeaway I'm getting here, Sean, from all these sectors is you're going with strength in the market leader, whether it's cybersecurity, lithium, steel, or precious metals. You like the quality companies that are growing, that have the good revenues, that are fiscally sound and have the good management team and the reputation that'll attract investor interest when the tide shifts in those sectors. So it looks like going strong, going with the market leader in all these sectors. And I just appreciate you coming on and breaking down how you're looking at these different areas for our audience. If people like getting Sean's thoughts, definitely click on the link below this interview. It takes you over to Weiss Ratings Daily, where you can see the different subscriptions that Sean has on offer, like Super Cycle Investor, like Wealth Megatrends, and like Resource Trader. So, as always, looking forward to our next conversation, Sean.
Hey, it's always great speaking with you, Shad. Thanks a lot.